Advanced candlestick patterns every trader should know. What are the advanced candlestick patterns that every trader should know? Candlestick patterns are among the most powerful tools in technical analysis. While basic patterns help traders understand immediate market sentiment, advanced candlestick patterns provide deeper insight into trend reversals, market exhaustion, and momentum shifts. Mastering these patterns can significantly improve your entries, exits, and overall trading confidence. Whether you trade Forex, crypto, stocks, or commodities. Here in this video, I am going to show you some of the most important advanced candlestick patterns every trader should know. Number one of these candlestick patterns is morning star and evening star. Now, let's talk about the morning star. Morning star is used for bullish reversal. A morning star pattern appears after a downtrend and signals a potential bullish reversal. It consists of a long bearish candle, a small indecisive candle that is doji or small body, a long bullish candle that closes beyond the midpoint of the first candle. What does this mean? This shows sellers losing control, buyers stepping in, and momentum shifting upward. Evening star is the other one that is a twin of the initial I spoke about. In this case, it is the opposite of the morning star, and it forms at the top of an uptrend. It tells traders that the uptrend is weakening and a strong reversal may follow. Now, let's look at the second one, which is the three white soldiers and three black crows. Now, let's talk about the three white soldiers first. The three white soldiers indicate a strong bullish continuation or reversal. Three consecutive bullish candles with higher closes indicate sustained buying pressure. What does this imply? A strong uptrend may be starting, or it may also be continuing. Then we also have the three black crows. This one is a bearish reversal candlestick. Three bearish candles with lower closes show sellers dominating the market. What does this imply? This signals a potential downtrend and trend reversal also. Now, let's look at the number three, which is the abandoned baby. This rare but powerful pattern signals a strong trend reversal. Then we have the bullish abandoned baby. It has a long bearish candle, a doji that gaps down, a bullish candle that gaps up from the doji. Then we also have the bearish abandoned baby. This is the opposite formation, showing strong bearish reversal. Why does this matter? This matters because the gap on both sides of the doji shows the market has completely rejected the previous trend. Number four candle pattern is the engulfing triple confirmation pattern. While a standard engulfing pattern is powerful, advanced traders wait for three confirmations. Number one, the engulfing candle, then a break of structure, and following through volume. This advanced approach reduces false signals and it also improves accuracy. Now, let's go to number five, which is the tweezer tops and bottoms. This is advanced interpretation I'm going to give you here. Basic tweezer tops and bottoms signify rejection. Advanced traders add context. Advanced tweezer top occurs at strong resistance. It matches psychological levels, e.g. round numbers. Then it's followed by increasing bearish volume. Then we also have the advanced tweezer bottom. In the case of the advanced tweezer bottom, it appears at market bottoms or oversold zones. It confirms with bullish divergence on RSI or MACD. Number six candle pattern is tree line strike pattern. We have the bullish tree line strike. Three bullish candles in an uptrend, followed by one large bearish candle. That bearish candle completely engulfs the previous tree. Shockingly, despite the bearish candle, many traders interpret this as a bullish continuation pattern because the market often continues upward after the temporary liquidation. Then we also have the bearish tree line strike. In this case, it is the reverse of the bullish tree line strike. And what happens here is that it often signals continued bearish momentum for the market. Then we have number 7 candle pattern, which is advanced. It's advanced doji patterns: gravestone doji, dragonfly, and long-legged. Doji candles represent indecision, but different shapes carry different meanings. When we have the gravestone doji, it's long upper wick showing strong rejection of higher prices, bearish reversal signal. Then we have the dragonfly doji. This is long lower wick indicating rejection of lower prices, bullish reversal signal. Then we have the long leg doji. This is extreme uncertainty and a possible major breakout approaching. Advanced traders use doji patterns with volume analysis, support and resistance, momentum indicators. Number 8 candle pattern is harami cross. This is high precision reversal signal. A harami cross consists of a long candle, a doji that fits inside the body of the first candle. It indicates the prior trend is losing steam and a reversal may be imminent. Why is this advanced? It requires proper trend context and works best when combined with market structure. Number 9 advanced candlestick pattern is the rising and falling tree methods. Rising tree methods, that is bullish continuation. It consists of a long bullish candle, 3 small bearish candles that stay within its range, then another bullish candle that breaks above the first. Then we also have the falling tree methods, that is bearish continuation. This is the opposite of the bullish continuation, which is the rising tree method. So the falling tree method is the bearish continuation and it is the opposite. Now, this one shows strong trend continuation with controlled pullbacks. Number 10 of the advanced candlestick patterns I want to show you is the kicker pattern, one of the most powerful patterns, and I want you to pay attention. The kicker pattern is extremely strong and rare. It indicates a sudden and decisive shift in market sentiment. Then we have the bullish kicker and we also have the bearish kicker. In the case of the bullish kicker, it has a long bearish candle, followed immediately by a long bullish candle that opens at or above the previous open. It opens at or above the previous open. Then we have the bearish kicker. The bearish fashion signals a massive sentiment reversal. Why does the kicker method matter? News events or unexpected fundamentals often trigger this pattern. In fact, most of the Forex major moves are triggered by news events. Now, how to use these patterns like a professional trader? Advanced candlestick patterns work best when they are combined. You don't just use them alone. No singular Forex strategy works good and best when it is used alone. You must combine it with something else. So you combine it with market structure, you combine it with support and resistance, you combine it with volume analysis, you combine it with trend confirmation indicators, you combine it with risk management. Relying on candlesticks alone is not enough. True mastery comes from combining patterns with confluence and proper risk control. In conclusion, advanced candlestick patterns allow traders to anticipate market reversals, continuation phases, and momentum shifts with greater precision. Whether you are trading crypto, forex, indices, or stocks, learning to interpret these patterns will help you take better positions and avoid costly mistakes in the forex market. If you found this guide valuable and want more expert trading strategies, chart breakdowns, and signal updates, follow my YouTube channel for daily trading insights. Subscribe to my YouTube channel for free lessons. Then join my FX and crypto signals up to level up your trading skills. Your journey to profitable trading starts now. Take the next step. Please, I want you to subscribe to this YouTube channel, like this video, share link of this video to family and friends, and keep coming back to this channel for more. My name again is Dr. Olubenga, and I'm going to see you in the next one. But before you see the next one, this video popping up by the side from my channel is the next one you need to watch now. Bye for now. A great shout out to Lara Laoye, a member of my YouTube channel. Thank you very much.